Hey everyone, welcome back. Hope you guys are having a great Friday. I do apologize for not recording a video in the last couple of days. Been extremely busy with my kids. They're in soccer right now, so that's after school, and that's taking up a lot of my time, unfortunately. But as you guys know, I do this in my spare time. My family is always going to come first, so I hope you guys understand. I'm going to try to catch up as best as I can. Luckily, there has been a lot of news. So the only news that we do have here is Core Scientific is basically selling a facility to Celsius, which is kind of great news for, well, Core Scientific. And then we do have also Iris Energy reporting their, well, first half of 2023. They don't do the quarterly results anymore. They only do the half-year results. So we'll take a look at all those numbers. The numbers are actually pretty good. They're going to be growing to possibly 30 exahash as well, which is kind of good. We'll take a look at it all. Is it actually a plus or is it a minus? But then we'll take a look at Bitcoin, what's going on there, okay? So as always, you guys know the drill here, not financial advice for entertainment only. Please do your own research. I'm invested in the following coins and companies. And if you guys enjoy this type of content, hit the like button, subscribe. Helps me out tremendously. I'm recording this right now. It's like almost 10 o'clock in the afternoon. So this will be out tomorrow morning, which is going to be Saturday, because I doubt anybody's going to be watching this at that late of an hour. Okay, so let's take a look at what's going on with Core Scientific here. And we'll get into Iris Energy as well. We'll look at the miners and then provide you guys what's going on coming up this weekend as well. Okay, so Core Scientific Inc. and Celsius Mining LLC enter into a purchase agreement for Core Scientific's Texas data center site, agreed to settle all existing litigation, so that's good there. Core Scientific finally gets that kind of written off their books here, but we'll get into the details. I think this is actually pretty good for Core Scientific as it is. So today they announced an agreement to sell Core Scientific's Ward County, Texas, Cedarvale, Bitcoin mining data center to Celsius to settle all existing litigation between the two parties for a total cash consideration of $14 million. So they're going to be getting basically $14 million for it, and it's actually valued higher than that. But to pay off the whatever that might, the litigation settlement basically. The proposed sale of the partially developed non-operational Cedarvale data center site includes 215 megawatts of available power. Buildings are under construction, equipment and designs to enable the completion of the facility. If approved, the parties would reach a settlement and mutually release with respect to all existing litigation. So that's good towards, obviously, Core Scientific. We also know that Celsius is going through bankruptcy right now as well. This might actually help out Celsius install the miners where they need to be to continue basically hashing away. Down here, we can see that the Cedarvale site transaction does not affect Core Scientific's mining fleet, and the site is not included in its 3-year roadmap, which was filed publicly in the June 2023. The mutually agreed value of the site is $45 million, and the total cash consideration paid by Celsius to Core Scientific is $14 million. So that's basically wiping off $45 million worth of credit or debt to Celsius, I guess. Okay, so that is all good news there. We'll see if this goes through. Other than that, let me see here. They go into some details about Core Scientific here, which we really have covered already in the past. Okay, so I just wanted to point that out to you guys. I think this is actually pretty good for Core Scientific, getting that debt extinguished basically through this agreement. And we'll see how they continue to go forward. They're still planning on getting out of bankruptcy, Chapter 11, by the end of October, possibly. Okay. Next is going to be Iris Energy here. They reported their full year operational, or not operational, not full year. They did report their fiscal year 2023 results, which also includes the first half of 2023. I've done some calculations on that as far as what the numbers were for the first half. We'll take a look at that in a second here. There wasn't much in here. I did listen to the conference call as well. They did say that they are going to be diluting about $500 million worth of shares, possibly a little bit more, with what they have in, well, they said they're going to do it 500 million with, I believe it was 200 million ATM, 300 million share offering as well. I believe that's the case. It might be around, might be 300 ATM, 200 the other way around. Okay. But here's what we do have here. They provided the information. I'm sure you guys already read all this stuff here. Let's take a look at the numbers that I do have here for them, and we'll just kind of go through it here. So right now, shares outstanding is about 67.7 million for Iris Energy. The stock price as of today was $4.49. Market cap was at 299 million. Current hash rate is at 5.6, you could say roughly. They're supposed to get to about 5.7, which is what they've purchased already. They said that they're going to grow to about 9 exahash by the end of the year, or by the time the halving event comes next year in April sometime. So they are obviously building out infrastructure right now. They haven't purchased anything yet. Once they do that, we'll update the sheets here as well. Okay. But when we look at the quarterly results here, maybe we should go just down the spreadsheet here. Take a look at the numbers that we do have here for them. So these metrics here we'll get into in a little bit. Assets, we'll just take a look at the basic numbers here for them. Total current assets is now at 89 million, which is an increase from the 74.6 million that they had, which is good. Total assets actually went down to 332 million from 411 million, and the main reason for that is we've seen a lot of property and equipment depreciation has come down to 241 million from 273 million, and the mining hardware prepayments also went down from 58.9 million down to 68,000 roughly. So that's the reason why you're seeing that lower number there. It's still good though. Current liabilities also went down dramatically here to 24 million from 140 million. So the borrowings of 110 million is pretty much gone. They only have 182,000 there. Trade and other payables is at 16.6 million from 17.6 million, so about $1 million less. And what else do I have here? Provisions actually increased to 6.1 million from 4.6 million. Nonetheless, total current liabilities going down is a good thing here. Okay, total liabilities, let's see here, is at 26.7 million. That's down from 141.8 million. So that's also good there. This 110 million here was from their special purpose vehicles that they had. They returned the miners back in this would have been Q4 in 2022, but I think that would have been their Q2. Okay, so they did return a lot of those miners. We saw obviously the hash rate come down because of it, and they're still in litigation right now with, well, the creditors trying to get some money from them because of the return on assets or return on the miners that they returned. We'll see how that plays out. Okay, on that one, revenue here also, this is a tough one here because before they were providing the quarterly results, now they're providing the 6 months results, half year. So the numbers are a little bit off here, but nonetheless, even if you multiplied the 13.7 times 2, we would have been about 26 million. They came in at 48.6 million here for the first half, which is obviously an increase here, which is great to see. Well, they reported here 78.6 million for the full year. So what I did here was I took the 2 quarter numbers that we did have here in Q1, which was September ending and December ending numbers, subtracted it from that, and that's how we got the first half of the year for this year, 48.6 million. Okay, so that's looking pretty good. They obviously installed more miners here in the first half. The revenues went up as well, so that's a good thing. A couple other things here to take a look at here. It looks like operating costs are based on, I didn't include a depreciation or gain of assets or anything like that. I just included the electricity charges, employee benefits, share-based payments. I included impairment of assets. I included professional fees and other expenses in here as well. And that got us to 93 million. So definitely still negative as far as income is concerned, net income, based on the 78 million that they did make here for the year. They're down on that. Okay, if we look at the first half, they're actually positive on that. They're 46.2 million compared to the 48 million here that they generated. So that's a good sign there. Let's see here, what else do we have here? Gross profit percentage minus depreciation was 54.54. That is down from the 55.18 they reported, or for the first half. For the year was 54. For the first half, it was 55. That is an increase from the quarter that they had in Q2, which ended in December, which was 46.48. Okay. They actually, based on the first half, had a net loss, which was a positive actually. So they had a net gain of 1.4 million compared to a negative loss of 129 million here in Q2 of last year, which was ended in December, right? This is why it gets a little confusing. I wish they would just provide the numbers quarterly. It would make it so much easier for us. We could track it a little bit better. But they're based in Australia and they don't have to, so they're not doing it. I wish they would still, though. It would make things a lot easier. So based on this, it looks like the net income per share was down to $3.13. I'm guessing because they're saying cents. So that would be $3.13. And then which is an increase from the actual loss they had in Q2 ending December of last year of $2.71. Okay. So overall, not too bad. Obviously, good to see that the debt is gone. They do have a lot of cash on hand and everything else. The other things to take a look at here with them is obviously their growth. Now, I do think that they are still undervalued, and with the debt being gone now, that obviously helps things out. So if we look at the actual 4-quarter results, revenues, it's not really per quarter, it's now halves, I guess. The H2 of 2023 was 48.68 million. Like I said, if you multiply that, that's better than that. The current quarter that we're in is at 34.52 million. If Bitcoin just stays where it's at right now, network hash rate stays where it's at, we could get obviously close to pretty close to being 70 million here for the second half or the first half of their fiscal year, around 70 million or so. Okay, but it just depends where Bitcoin goes. Last 4 quarters operating costs, you can see that those have been coming down, which is good to see. And then this first half of the year, we've had 46.2 million. That's pretty close to the almost 20 million that if you doubled it or if you combine the 2 quarters here, they would be above that. So we're pretty close to where they were. So that's still not too bad. Okay. Down here, cost of one Bitcoin, they came in at 12.42K minus depreciation. I thought it was lower than that. Take a look at this here. H2 should have come in at, what did they come in at? Custom, okay, it did come in for 12.4. And that includes obviously the expenses that they have. For the year, it came in at 10.973. Okay. So that's what we're looking at there. And let's see here. Bitcoin mined quarterly, obviously that has been increasing here, even if they doubled this, 722 Bitcoin in Q2. You're still above that in the first half of the year, so that's good there. Debt to equity ratio has come way down, which is great to see. Lower is always better on here. Current ratio is up to 3.7, which is great to see because they were at 0.5 in the end of last year. So that's always good to see that they got plenty of cash on hand to pay off the current debt that they do have, which is nice. And then total current assets, obviously at 89.2 compared to the liabilities of 24.0 million. That's good there as well. So based on this, I have in between, if we look at the last 4 quarters, and then let me see here if I'm using the numbers here, last 3 quarters, which would be actually, let's take a look at the numbers that we are using here. So we're using those numbers here. I probably should be using the number that they actually provided here, which is this one. Getting rid of the quarterly results here, which was my estimate here on that one. And that was at the end of March. Let's do that. We'll get this fixed. So now we got the last 3 quarters, basically, numbers for them. And then I have them at $6.72 to $10.08. And then if we look forward, going forward the next 12 months, which we have the halving event next year in April, if we multiply the next 7 months by the full 100%, and then 5 months after that with 50%, I have them at $12.20 to $18.30. They are definitely way undervalued right now, in my opinion, based at $4.49. Now, given that they are at $4.49, like other companies are still way undervalued because of the way Bitcoin is acting right now, I think one of the things that's maybe holding investors back is the fact that I don't think they did the wrong thing. I think they did the right thing by turning in those miners last year that were the special purpose vehicles on those loans, as they would not impact the company credit at all, because those were separate from the company. They couldn't go after the other assets of the company or anything else. So I think they structured that very well. But I don't think they're going to be able to do that going forward, because nobody's going to really do that once you actually do that to somebody once, right? Fool me once, shame on you. Fool me twice, shame on me, right? So I don't think anybody that's going to give them a loan or anything like that will ever do a special purpose vehicle loan for them again. But that's kind of what I'm thinking here as far as why they are possibly undervalued. Also, let's take a look at some of the presentations that they had from the conference call here. And we're going to get into some of this stuff. So from here, they're saying that they're going to get 1.4 cents per kilowatt power, basically, which is very, very low. I don't know how feasible or how likely that is going to be for them to get that low. But this is what they're stating. They're also stating they're going to get to 30 exahash Bitcoin mining. And that's through the $500 million in dilution that they're going to do in the shares going forward. We don't know exactly when they're going to do that, but they are building out the facilities that they need to have that done. and we'll talk about some of the timing things as well here. So ultra low cost, primed for significant growth, 1.4 cents, 30 exahash, next generation compute, generative AI. So this is the next thing that they're trying to get into. And this is what they're saying here is basically they're going to get possibly a 6 cents reduction here, or 0.6 of a cent reduction in 4CP benefit. And then that's what they're saying, 1.4 cents if actual if 4CP is received. And there's a lot to it here. So number 3 here is down here. It says reflects the internally estimated value from load reduction to reduce for coincident peak 4CP, right? So during the year you have 4 basically high demand, or what they call 4CP. And if you can actually lower your power draw during that time, you would get a benefit going into the next year. I remember this as well from when we were mining last, we stopped mining in 2022, but the 5 years prior to that, we were also trying to kind of keep that in line, keep that low, because it does help out keeping your costs down. But it's going to be obviously not, it's going to be tough. I'm just going to say that. With respectively, assuming current market conditions, 388 exahash difficulty, implied global hash rate, 6.25 BTC. So that's obviously all implied into that as well. But they do say that they don't know if they're going to be able to manage to do this if they can, right? Even if they're at 2.6, I think that's really low. 1.4, I think, is stretching it quite a bit because these are estimates from them, and I think they're trying to make the numbers look better than they are. But that's just me. We'll see if they can actually reach 1.4 cents if they get the credits and everything else on that. Okay, now as far as, let's see here. This is another one that's kind of confusing here. They're saying that 4.4 thousand per Bitcoin cost of power. There's let me see. This is illustrative electricity cost per Bitcoin at Childress based on one. Yeah, so they're saying that based on 1.4 cents. But actual in August 2023, number 2, Childress generated US 2.3 million of power sales in August 23, 84 Bitcoin equivalent, which represents unaudited power credits primarily driven by voluntary curtailment under hedge contracts based on AEP meter data and ERCOT real-time prices based on monthly electricity invoices received, as well as internal estimates if as applicable, and excludes REC purchase and value of okay, that's a lot of electrical jargon there. But it's still hard to believe that they got 28,000 per Bitcoin to take power. Okay, maybe they did. So maybe they equated that to approximately, what was that they said? Number 2 here, they equated to 84 Bitcoin plus 28 Bitcoin per 28,000 per Bitcoin in mining revenue. For the company achieved revenue per Bitcoin of 27,000. And okay, so they're saying that curtailing that, they got paid basically roughly 28,000 per Bitcoin, and then they also, when they mined, equals 56,000. That's not true because you're either mining or you're selling power credits. So all in all, you're getting 28,000 for that whole time. It shouldn't be 56,000, at least in not my calculations here. And they said number 5 here. Number 5 means mining profit calculated as Bitcoin mining revenue less net electricity cost. Okay, I think this is a little bit misleading here for investors, because you're either curtailing or you are mining. If you're curtailing, okay, fine, you're getting 28,000 per Bitcoin more or less on even. And then when you're mining, you're getting 28,000, but it shouldn't be 56,000 to mine Bitcoin profits. So that's a little misleading, I think. Okay, now let's talk about this 30 exahash program here that they're saying that they're going to get to. Single site expansion, obviously, ongoing delivery and construction process. So they are purchasing long lead times items, that transformers, things like that you're going to need to get to 30 exahash at their facility. They have 69 million existing cash, 57 million ELOC capacity, and they're offering obviously the 500 million shelf filing. So here we go, 300 ATM, and the 200 million is other, and then operating cash flow. So based on this I think is actually correct as far as how much it's going to cost them going forward to get to the 30 exahash. The tough part is, how are they going to execute? Are they going to execute during the bull market, which I would think is going to be a mistake based on what I know over the last 5 years, 6 years or so. The best time to build out is, or at least buy miners, is in the bear market. You want to build out also a little bit in the bear market because things come down in price. People are not investing in transformers, things like that. Prices actually come down on those as well. And I would think that if they're going to be smart about it, they would be best right now to get to the 9 exahash before the halving event. And then next year, as we get into the bull market sometime after the halving event and into 2025, they would be best to basically sell everything that they mine if they're trying to grow, because they've been selling everything that they mine anyways right now. But if they sell everything that they mine, with Bitcoin going up to maybe 100, 200,000, 250,000, whatever it might be, that's going to generate a lot of revenue there. They might be able to actually dilute less if they're patient with it. If they're going to be building out in the bull run here, that's going to be tough because prices are going to be going up on not only the ASIC miners, which we've seen time and time again as the network hash rate goes up, so does the price of ASIC miners. And that's not the right time to be buying. The right time to be buying is when Bitcoin is going down. We're into a bear market, and that is the time to be buying everything that you need to fulfill those built-out construction sites that, basically the data centers at that time. So my thought is on this. I do love the way that they have been doing things the last, I would say, 9 months or so. But we have the problem with them giving up the miners back in October, November of last year because they were not profitable, and that's because they bought them at the bull run. So I'm hoping that they actually learn the lesson this time around, that is not the time to buy miners, that the best time to buy miners is during the bear market, like some other companies have been doing right now, and they've been doing really good on that. But that's the only thing that I really have as far as what's holding me back from buying shares of Iris Energy. I really don't know when they're going to be pulling the trigger on buying ASIC miners. If they're going to be doing it possibly in the bull run, that's not something that I want to get into. So I need to find out some more information from them, see if they have any interviews or anything like that as far as when they're going to be doing that. If they say that they're going to wait until the bear market comes around after the next halving event, okay, that makes a little bit more sense to me. I think that's a great way to do it, because then you can also, one, increase your revenue a lot during the bull market, and then use that capital to build out in the bear market, which means you could also dilute less than the 500 million shelf offering, which was 300 ATM million and 200 other. So I'm hoping that they dilute less if they do this properly. If not, they're going to have to dilute the full 500 million plus to get to the 30 exahash, which would be obviously installing around 21 exahash of additional miners. So that's definitely a huge increase there. Okay. But let me know what you guys think of this. Like I said, the only thing that's holding me back right now is, one, I want to increase my CleanSpark shares to 10,000 shares. I'm at 8,500 shares right now. I have a little bit more to go there. And once I get to 10,000, I'm going to be happy with that, and I want to invest in another miner. But the other miner that I wanted to invest in was Iris Energy. But based on what I'm seeing here, I need to have more data as far as what they're going to be doing, when they're going to be doing it, to see if it actually makes sense. If it doesn't make sense, if they're going to be, like I said, investing in buying miners in the bull run, that's pretty much a break deal for me right there. Okay, so that's it. Other than that, when we look at the actual numbers that we have for them here, like I said, I still think that they are undervalued, especially if they get to 30 exahash after the halving event, things like that. They should be valued a lot higher. But that's it. That's why this is another one that I want to get into. And then also when we look at the actual numbers for them on possibly tomorrow's video, if I get it done, we look at the miners that did really well in August. So we'll compare all the miners in August performance. They came in pretty high up there as well. So that's one of the reasons I want to get into them. But I have other priorities that I want to get into as well before then. And if those priorities get met, then I want to get into them. But I need more data, more information from them. And like I said, hopefully the interviews with the CEO or somebody like that will help determining whether I want to get into them or not. Okay. So as always, you guys know the drill here. These spreadsheets are available to my Patreon members. Thank you to everyone there as well. I checked earlier this week how long I've had the members, and I was surprised. I had some members that have been with me for like almost 2 years now. So I want to say can't speak. A sincere thank you to those that have been with me for almost 2 years. I'm going to try to offer you guys something special. I don't know what it is yet, but I will try to do something for you guys special there. And also something to note here, at the end of the month, the price is going from $4 to $5 for Patreon members there, because I haven't raised prices in over 2 years and things have obviously gone up in price. So I'm basically keeping up with the price of coffee. Okay. Also, like I said, the miners metrics for August are coming out tomorrow or Sunday, depending when I get it done. And then we'll see what happens later on this week. And I still have a lot of work for you guys as well. I need to provide the Patreon members with this update. I need to provide the YouTube members with the screenshots of all the metrics for all the miners as well. I'm falling behind, and I'm going to try and catch up this weekend. All right. That is it. I hope you guys have a wonderful weekend. Thank you so much for watching. I hope you guys enjoyed it. If you did, hit the like button, subscribe. Helps me out tremendously. And I'll see you guys in the next one. Bye.